All right, good morning, everybody. How you doing today? Let's get a quick sound check. Make sure we're broadcasting good. Hey, Jerry. How you doing? Okay. I just want to go on to one particular topic. I'm going to actually give everybody. I'm giving you homework, which I'm sure everybody's just would love to hear going into the last week or so before everybody starts to get crazy to go shopping and pick up last minute stuff. One of there's a recurring theme in the questions, um, both in emails that I get as well as some of the posts that I see here in the room, and it's a really good question or a really good topic that really needs to be clear. So I'm really going to talk about it. It's how do I know when I should trade heavier, should trade less, should trade more aggressively, should trade less aggressively. I don't know exactly how we want to word it, but everybody understand the point. The question basically is how do I recognize better market conditions from tougher market conditions before I churn my account into oblivion on a particular day. I think that's probably the better way to put it. It's like, how do I recognize I should have stopped trading an hour ago, or something along those lines, or I shouldn't have traded yesterday that actively, or those kind of things. So essentially, what I'm going to let's start out with one side of the equation because one side of the equation makes the other side should make the other side easier to figure out. Okay. So the homework assignment for between now and 8:30 Monday morning is how do I recognize great market conditions? How do I recognize with all the stuff that I know how to look at? The VIX, the trend, the ticks, sector analysis, meaning you have five different stocks in the same sector. What do they have to be doing? What does the broad market have to look like? What a time frame analysis have to be looking like? All of those kind of things. And it's maybe 7 to 8 different things that would be perfect. In a perfect world, they would all be, oh, that's what that looks like. Let's start out with that. And I don't want to give it to you because I want you to work on it. I want you to really think about it. I really want you to get a sheet of paper and a number two pencil and write it out. And we'll have a good discussion on it first thing Monday morning. That'll be what we talk about Monday morning. It would be very easy for me to hand you a playbook and be like, okay, this is exactly what you're looking for when all those things line up. That's learning works better when you're engaged in the process. So I don't want to just hand it to you. I want us to have a discussion about it. So it is, in my opinion, extraordinarily important to have a really good grip on it, and I'm going to tell you why from a couple of different perspectives. Number one is you'll learn and not well first learn, but more importantly recognize while it's happening if you should be busier or not busier. That's one thing. The next would be you'll recognize if you're not earning money. Is this a tough environment or am I not trading well? Because there is a very big difference between those two circumstances. Okay, it's one thing if it's a tough environment and you're just not getting follow through, but you're doing what you're supposed to. Then you're like, whatever. That's part of the business. It's another thing if it's a environment you should be making money in. And when I say environment, I could even be talking about an hour. It could be the first 90 minutes of the day, and then the rest of the day could be a chop fest. But if you prepared for whatever that even could be from 1:30 to 2:30 in the afternoon, whatever it happens to be. If it's a really good environment and you should have earned money and didn't, you have to recognize while it's unfolding what happened, so the next time you're ready for it. One of the biggest things that I had mentioned yesterday several times that was one of my personal demons, for lack of a better way of putting it, that I had to work myself through was in relation to this is I never had problems taking losses. I've I've had sleepless nights when I didn't earn what I was supposed to. So then I worked really, really hard on how do I trail stops in a systematic way? How do I recognize if today I should get out into momentum versus today I should, on momentum pauses, I should be looking to build a position. Okay, and all of these things ultimately end up going into a part of your plan, and a lot of that has to do with profit target. A lot of that has to do with what's the broad market doing, what's sector analysis doing, and all of those things have to be strategized and then analyzed. Strategized prior to putting the trade on, so you have a system, and then analyzed while the market's open, so you can make that decision. So, like, actually, I'm not sure if Susan's here this morning, but yesterday maybe recently, basically talking about how do I know if I should be booking smaller profits versus, let's say, Mike's conversation about where I'm adding to it, and those types of questions should be answered before you put the trade on, so you know what type of trade expectation you have before you put the trade on, and that's all decided based on the environment. And I guess the best way to describe that is, again, I'll always go back to driving a car. Yesterday I grew up on Long Island, so yesterday I hop on the Long Island Expressway and nobody was on the road. I could do 55 and I didn't have to worry, whatever. I didn't have to put my foot on the brake once. Today, same exact time, same exact road, and now the road is packed. You have to recognize that today the road is packed and you can't just do 55. So you have to pay attention. And yes, that's work. That means you have to work and you have to pay attention. So I guess really to think about it is most of the preparation is done prior to the day, and then when the day is open, it's just focus. It's just can you be focused for that 90-minute, 2-hour window in the morning? Can you be focused for that 90-minute, 2-hour in the afternoon? So it's basically 4 hours of intense focus on your strategy and whether or not your strategy is unfolding. So the difference that makes the difference is having a map in your head of what a great environment looks like and what a tougher environment so if we work from, I usually like to work from 1 to 10. So like 1 is a crappy environment, which nothing's following through, spikes up, spikes down, you're buying highs, you're losing money, shorting lows, losing money, that kind of thing. So that's the 1. And you go all the way up to a 10 where everything on your screen is lighting up red or green. The market internals are perfectly fitting exactly what you would want to be seeing. Everything perfectly lined up. Well, let me ask you, what does that look like? What does it look like if everything is lining up? Make a checklist for yourself. Don't I have traded with literally thousands of traders at this point in my career, and every trader had posted pads on their monitor at some point. And literally, you could tell like how new somebody was versus somebody. You have, let's say, 10 of them on your monitor to remind you of all these little things. Make sure you check the ticks before you get into a trade. Don't buy 1,000 tick readings. Wait for it to pull back. Is the trend? Is the trend? All of these things, and then eventually, all of these things ultimately become second nature to you. But you have to first have a structure or a written checklist that will eventually become a mental checklist that will ultimately end up being your trading plan. So, and I guess I could direct this at Coop a little bit. Yes, from yesterday's comments, I was thinking like literally all yesterday afternoon and into today about how strong your comments were about how you were trading right now, and I want to work with everybody to ask you, do you know what a great environment looks like? And let's start with that so we can all spend a couple of days. And again, I know everybody's got commitments and all that other stuff on the weekends, but this is your business. So if you're going to run a business, you can't forget about in your spare time that you're running a business, and that's when most of your planning should be done. So I'm a very big believer in how you spend your spare time will dictate how you spend your future. So you have to prioritize what is important to make my business grow right now. What's important for me to reduce my expenses and or grow my revenues. Again, I'm not saying you have to be spend 18 hours on the weekend doing it. You just go to Dunkin' Donuts, buy a coffee or whatever you drink at Dunkin' Donuts, and sit down for a half an hour. What does a great environment look like? And we'll start out with that on Monday morning, and then we'll reverse engineer what a really tougher environment looks like. And then where you are on that scale between 1 and 10 should adjust your share size, should adjust your expectations for how long you hold the trade, all of those kind of things. So when you get that mental scale, for lack of a better way of putting it, in your head, you'll automatically know, because you know what 10 looks like and you know what 1 looks like, and you should be able to come up with where you are in the middle, not in the middle, where you are on that scale. And that's really what ultimately good trading is, and that's ultimately where traders who succeed have that as an automatic process. So what I'd really like to do is really help you guys understand that thought process so that you won't trade for the sake of trading or because somebody else called something out in the room. Maybe they're hungover. You don't know if somebody else is hungover and they call out a trade and you put the trade on and then like, oh, what the heck am I doing? This stuff, have your own structure. I am very, very adamant that no matter what education we provide for you guys, or what mentoring we provide for you guys and structure, it really still boils down to you have to take the education and make the education your own. So our job is to give you a really solid foundation from which to build, and then you tweak it a little bit based on your risk tolerance, how much time you have you could put in front of a screen on a daily basis, all of those kind of things. So the one thing I'll follow up with, and then we'll get started on looking at the game plan today, is I would recommend if you're having a little bit of a tougher stretch, put together a list of stocks. Let's say 20. It doesn't matter what they are. You pick them. I would say between 50 and let's say $150. Which is a pretty wide range, believe it or not. And again, I'm just throwing it out there, between 50 and 150. Pick 20 stocks that have, let's say, an average true range of $1.50, $2, maybe even more than that. Let's say $1.50, just for argument's sake, because then it'll be $1.50 and above. 2 million shares, over $30, average true range of $2. I'm willing to bet that one scan will probably pull out 120 stocks. So then you go in and you look at the stocks on the 15-minute charts and you're like, all right, how does this thing actually trade on an intraday basis? Does it have, does it have wide swings or 50-cent moves? Do I see a lot of tails? That kind of thing. Pull up a 5-day, 15-minute chart. Get an idea of what it looks like intraday. Can you handle that? Then watch those stocks intraday and get a look at the spread. If it does 2 million shares, does it do 1.5 million of it in the first half hour of the day and do nothing the rest of the day, or does it trade consistently through the day? Pick your 20 stocks and then learn those 20 stocks inside and out. And then we could work from there, because once you start to see consistency in the stocks that you know, then we can expand that list from 20 to 30. And then 20 to 40. And then the better you make decisions, the more you can get involved in a bigger list. So instead of taking, let's say, 4 trades a day from that list of 20, now maybe you have a list of 40, and from that list, then you can get involved in 8. But it's 8 good ideas, not just 8 ideas because of superfluous reasons. You want to be having all of them as planned reasons. And I will tell you now, I'm going to see into the future, and let's say it's 2 months from now, and you're going to be sending emails and talking about it in the room here. You're going to be like, trading is so much easier when it's planned out. So the thought process is you want to have your ideas prior to the market open, and then all you do for as long a stretch of period as you can is you only execute the ideas you pre-plan. And to heck with what anybody else is calling out in the room, because they're not paying your bills. And I'm telling you, when you give it a shot, give it a realistic expectation to say, you know what, let me try that, because finding ideas at 10:15 isn't working. It's not paying me consistently. Let me try something that makes sense. And believe me, I've been in your shoes. Okay, I won't say anything to anybody that I wouldn't, because I respect the fact that you really, this, I'm just mailing it in. You're here to really try and learn. I will not tell you anything that I don't think will help you immediately. And the advice that I'm giving you now, let's do some work on that 1 to 10 scale of what a great scenario looks like, and you work your way away from that so you develop a trade expectation, and then ultimately getting to the point where give yourself a chance to pick 20, let's say 25, even expand the list to 25. 25 stocks, and you just stick only with those 25 stocks for a month, and you only trade pre-planned ideas. I'm telling you what's going to happen now. When you sell me, I committed to it for a month. I'm going to tell you what you're going to email me. It was stress free. It was easier to trade, and I was consistent. And who in the world wouldn't want to be able to say those three things about their trading? Because the second part of that is going to be I did what I was supposed to do today. I recognized it as a better environment. My trades just didn't follow through. But I'm okay with that because I was in control of my trading. And isn't that really what we all want? Consistency and control? That's what every trader wants because you want to get paid. You want to come into the market every day feeling like I know what I'm doing. It's just a question of do I get follow through? That's what we all want. So I wanted to throw that out there so you guys can think about it today, Saturday, Sunday, and hopefully at some point over the next 3 days leading into Monday, we can have a discussion on Monday about what a great environment looks like, and then how to we'll work our way up and down from 1 to 10. So during the day you can have that mental scale in your head. Okay. All right. So let's get into today's list. You can see that I actually carried Cam overnight. I feel like it was significantly overdue for a bounce this morning. So I didn't carry a lot, but I got a decent head start on a trade today. It's going to be interesting because we're going to get the same type of opening that we got yesterday, where basically the high of the day was right out of the gate. So it's going to be interesting to see if we have this higher opening today and go sideways and have another push to the upside, or if we have similar to what we did today. I was actually looking at a couple of people typed in Sina, I think it was this morning, or Baidu. Sina actually had a pretty decent push down this morning. Not quite enough yet, though. I'd like to see it push down just a little bit more. I actually have my bid in right now at 48.50, which, like, again, is roughly 80% of the ATR from the previous close. So it actually still has to pull in another $1.30 for me to get involved. But I have an order down there. Another one that I have this morning is Intuit, INTU. I have my Intuit bid at 49.75, which is, again, almost $1 lower than where it's bid right now. But I'm basically telling you the prices I'm putting my orders because I want you to get there's going to be times you're going to place the order like, what the hell would I place the order out there for? It's $1 away. It doesn't matter. You want to get filled at your price or not get filled. I can't emphasize that enough. Get your price or don't get filled. So again, my bid into it right now is 49.75, which is $1 lower. So that's where I want to get filled. So I'm not moving it. Let's see. Next, I have Lilly, LLY, for a saturation short today. Interestingly, a lot of stocks in this sector are strong right now, so you have to have a couple of other stocks: Lilly, Merck, Pfizer. Was it VRTX, I believe? All of them are very strong today. So you want to have one eye on your saturation short and one eye on the mark on that particular sector. But this looks really, really good. It doesn't have a monstrous ATR. Why 48.50? Let me pull it back up. I don't have the chart. Hang on a second. Sorry, I get on a roll and I don't even look at the screen. ATR is 424. So $4 from 52.80 would be 48.80. Minus a little bit more from the, actually that might be a little bit low there. I could probably raise that a little bit. 40, I might be able to get away with 49 on that one. Yeah, so it was right in that area. Right in that area. So what was the next one I had? Lilly, LLY. ATR here is just under $1. Yesterday closed at 41.22. So I have that one at 41.95. So I have that roughly just in front of the figure. So maybe it goes past by maybe it goes past me by about a dime or so. But I want to get that trade off. Another one I have is Oracle. I haven't traded this one a lot, but we actually did a pretty good job of calling that bottom yesterday on that capitulation. It didn't bounce a lot. But set up pretty good on the daily and at support. We would have had a phenomenally aggressive trade if this stock would have opened lower. You can see that support from about 3 weeks ago. ATR here right around $1, so bidding just above the $28 level. I'm actually bid at 1,000 at 28.20. Again, but the point I'm trying to make is one, the structure setting up the trade, but secondly, more importantly, is I'm showing you I don't want it unless I get my price. So no matter how ridiculous your price is on these pre-market orders or the earlier part of the day orders, Put them where you're supposed to put them. Don't put them out there just to say, oh, it's a saturation place, so I better get filled. Put it out there at the price you want to get filled, no matter how ridiculous the price is. Because I'm going to tell you what's going to happen, let's say 3-4 months from now. You're going to get comfortable placing these orders, and you're going to have 6 to 8 of them, and you're going to be like, wow, all of these are valid. You put them out there, and what's going to happen is 9:35. You're going to get filled on 8 positions at once at the prices you want, some long, some short. And you know what's going to end up happening? You're going to be managing those 8 positions at the price you wanted. 6 of them are going to explode in your direction. 2 of them, maybe you lose money, maybe they don't do anything. You kick out the 2 that don't work, and then all of a sudden the other 6, because you got it at such a ridiculous price, like we had in the UAL trade last week, like I had in the Honeywell trade yesterday morning. All of a sudden you'd be like, oh my God, I'd rather get filled at my price than not get involved at all. And then when you get good, you ultimately hold on to some of those good ones, and you'd be like, all right, let me see what the first pause does. If we put where I am on that, is this a good day versus a tougher day? If it's one of the better days and you got a great fill, then you get to the point where you start adding to those trades, and ultimately, if you feel like you have a good environment, you can hold on to them into the close, or at the very least the first few hours of the day. So there's nothing better than having these saturation plays play themselves out in the first, let's say, hour of the day, and then you shift over to, let's see how my analytical ideas are doing that. All the garbage time in the morning is out of the way, where most people are confused, but we're perfectly content with planning the open. So it's pretty exciting to be able to have both of those. But more importantly, again, I just want to walk you through. If you have in your mind some of the ATRs are a ridiculous price, put it out there anyway. Okay, put it out there anyway. And the other thing I want to mention, quite a few of the energy stocks are that whole sector, industry, whatever the heck you want to call it. Some people call it one or the other. There are a lot of stocks right now that are taking a beating in that sector. When you see an entire industry getting hammered like that, meaning you have 15 saturation plays that are saturation longs in a particular industry, that means there's something broken in that industry, and you got to take those. You don't want to take 12 trades of the same industry, because then you're basically just trading one big stock. So you want to break that up a little bit, or pick the best of the best that you feel if there's some saturation there. But if you see an entire industry collapsing, you want to be careful about jumping in front of all of that money being dumped into or out of that industry, and you might want to give it an extra day or two for the fade. Okay, and I don't want to use the word fade. I like saturation because it really gives you an idea that buying or selling pressure is saturating. It got up to a level, and now buyers and sellers are kind of matched up, so it's not advancing anymore in that direction. Okay, so that was a good half-hour rant. But I think that the game, I personally think that the morning, setting up the morning and having the right thought process heading into 9:30, heading into the bell opening, I think that's one of the most important things that I could do for everybody. Because let's face it, that's when the most opportunity is, as soon as the bell rings. So if we're the most prepared traders on Wall Street at 9:30, then we're doing our job. All right, let's actually start out with some saturation plays. We'll reverse it a little bit today. BHI, I actually have BHI in my list again this morning. FIO. I think Mike and Steve trade this stock a lot. Got to be careful this FIO. You see, just a couple of days ago, it broke out of a 3-day trading range over here. It was trading between 25, 27.50. It's a little bit wider range, but you can clearly see that it just broke out of that range. So I don't normally trade this stock. I don't know how it normally trades, but it did just break out of that range. Next we have Sina. I do like the Sina. Next we have SLB, and this is kind of getting back into what I was saying before about a lot of stocks in the same sector. I do love the support in SLB down here just below 66. Really hoping for a lower push off the open there. COF. COF is not a perfect saturation play, but if you look to the left, we do have that gap, the low from the gap there just below 43 where it gapped up that day. I think a lower opening here and some intraday support could be a pretty solid opportunity. We'll see how that unfolds. CAM, you can see I have the overnight in CAM this morning. CERN. CERN looks very, very good. 20-day breakouts, 20-day breakdowns are solid. And again, if you just go to the left here, you can see there was a 3-day consolidation there. It broke out of it. Now it's the fourth day. So I like that one in CERN. Just make sure it's printing busy enough. Lam Research is actually an interesting one because as I had mentioned the other day, I would never tell you not to do something specifically, but I will tell you specifically what I don't personally do. I don't trade saturation plays that have had news. And Lam Research has had news. They're buying Novellus for 3.3 billion or something like that. So again, I can't stress enough. I personally find the saturation plays that pay the most consistently are the ones that don't have news. In other words, I'm just trading the technical setup. I'm just trading the buying and selling pressure from that 3 to 5 day window. So if you game planned it and you want to trade it, that's up to you. I am telling you that I don't find news plays and saturation plays to be consistent. Okay. Let's see. Next we have OIH. OIH does look good. You did have that gap through support a couple of days ago. However, if we do get a push down this morning, it looks like we're going to open up higher this morning, but if we do get a push down and a clean pivot low, I do like that one as well. Rig, again, we keep getting into this whole sector, for lack of a better way of putting it. There's all these energy stocks and whatnot. I like this one. I mean, it's basically well offered. 1, 2, 3, 4, 5, 6 out of 8 days. Lower lows, lower highs. Since we had that pivot high, just about $46. I like this one too. Let's see if we get a lower push down here. OXY. I like that one too. Would have liked to have seen it push through a little bit lower, but what I really like is this support level down at 86.50. I like that a lot down there. Qualcomm, QCOM. Pretty good. Again, we would have liked to have seen yesterday outside the previous day a little bit lower, but I think a push down to the 51.50 area looks pretty good. CENX, and remember what I said, saturation longs that open higher, you don't buy the higher opening. You let it pull back and test today's low or yesterday's low for the trade. CENX looks pretty good too. Again, we would have liked to have seen a little bit lower opening yesterday and trade outside of the previous day a little bit more. It didn't. It's okay. I wouldn't say it's great. I would say it's like 6 3/4 on a 10, just because it didn't push down a lot yesterday. Barely broke the previous day's low, so we really need a nice push lower on that one. On the short side, a couple of people, including myself, had Teva, TEVA. And interestingly, 20-day breakout there as well. It's taken out the most recent couple of months. I think a nice push to the upside here. We could set up a short, but again, if you look at a lot of these stocks, a lot of the pharmaceutical stocks were bullish yesterday, so we got to keep an eye on that as an overall sector type of thing. Let's see, we'll get to the regular longs right now. Duke, DUK, very good setup, good relative strength, trading at the high of the most recent price action. So I actually like this. Again, I'll preface it the way I do a lot of these. I like it as long as it's above this 21. The longer it stays above the 21 intraday, the $21 level, the more I like it. Let's see, ETFC, which was written down as a capitulation play. Byron, I actually I like this one. There was a bigger push in volume last couple of days. We got down to that $8 level, and not a bad play. You could have played it as a saturation yesterday. Not a bad play, and I like the way you specifically put it's a capitulation play, which allowed me to read it as a game plan of, okay, that's out of the manual. That makes sense. All right, DVA. DVA is a little bit of a mix here. The prices are closing below the 21. The 21's flat, and now the 8 is below the 21. However, if you take those guys out, you see a pivot low there on the daily chart. So if you're trading the technical pattern, the pivot low, you do have a pivot low on the daily, which should lead to a push higher. So moving averages aren't clean there, but you do have a clean pattern. TRV, nice breakout in TRV. If it gets above yesterday's high, it could be a little more aggressive depending on where it opens today. ExxonMobil, we've had that as relatively strong for the last few weeks. Same thing with PM. Both of them look pretty good. Now, again, something very, very important. If you've been game planning these stocks and they finally start to take out these levels, make sure you're involved. Set an alarm or set a buy stop for 100 shares. Either way, you'll want to be involved when it gets up there. You do not want to game plan for a stock for a week 2 weeks, 3 weeks. Nothing, 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 nothing. And then it finally does exactly what you want, and the train's leaving without you. Set an alarm or set a buy stop for 100 shares. So for example, in PM, I'll just use this as an example. Let's go over the wick. Let's say it's 76.75, just for argument's sake. Put a buy stop out there for 100 shares, or set an alarm for 76.75, so that if it gets to that price, you're alerted and you get involved. Let's see. Next we have Boeing. Boeing again, some good relative strength, and again we've been game planning this between 70 and 72. Everybody should have an alarm set for 71.90. You want to be alerted before it gets there. Monsanto, Singh had put in there that it looks like it's holding support down in the 68 area, and now you got a bottoming tail and a pivot low down at support. You can justify it. I mean, it's basically in a trading range, and you're buying support at the trading range for give or take a little bit. It's basically trading between 68 and 74 for about 8 weeks now. And if you're buying the support at 68, it's not the worst trade in the world. I mean, there's no bias, so you're not trading against the trend. Maybe you can make a case that we're starting a downtrend now where we make lower pivot highs, but the bottom line is 68 is still support. So if you're bidding into support and that pivot low, it's not the worst long idea I've seen. Okay, so again, we go to that scale of 1 to 10. I'd probably give it a 6.5. If the market's strong, maybe a little bit more if you had the market a little bit into that. Last but not least, LVS, basically the same thought process. I like the other one a little bit better because it's in more of a trading range. This one, to me, seems like it's in a little bit more of a downtrend with already breaking support. So I think it's a little bit different. All right, on the short side, we have FII. I like that one. Good game planning there. Goldman, as we've been talking about lately, has been relatively choppy. However, the 8 is above the 21. 21 is clearly pointing down. But again, if you use a little bit of a wide angle lens here, it's trading between 90 and 105. You get close, maybe a little, even a little bit below 90, maybe like 88. As far as I'm concerned, this sector, other than a saturation play, is not very clean right now. It's just, I haven't traded the financials aggressively in a while. And in my mental notebook, in my mental picture of really solid plays in this industry, the only ones I've been playing right now have been saturation plays because I don't think there's a clear trend in any of these. If we start to break down, push down, have a pause, and hold below some of those levels, then maybe personally I would look to the short side a little bit more aggressively. But again, if you maybe you're trading an hourly time frame. That's clean. That's clean to the downside. So I don't want to filter it from. I don't want to give you my filter if you're not trading my filter. If you're trading the intraday trends, it is a downtrend. If you're looking at the daily like I normally do, it's a little bit of a mess. So make sure you adjust your game plan according to which trend you personally are trading. MCP, love this stock short. Wish it would finally break the support level. WPI looks pretty good here as well. No clean patterns though. You can see it doesn't saturate up, doesn't saturate down. So again, if you were game planning to learn how to trade a stock, this is clearly in a downtrend. There's not a question about that. But look at the tradability of the stock. For virtually the entire month of November, it was in a trading range. Then we broke down. We went into a trading range for 4 more days. Then we broke down, went into a trading range for 5 more days. So it seems to have these $2 trading ranges that it doesn't get out of. So the tradability of that doesn't look that great other than the day it had news and had that big gap. So when you're building your list of which stocks you're going to trade, the tradability is very, you can tell that way too. GMCR does look like it's a better sell short than a long right now. KLAC. I don't know. If you're trading a momentum breakdown below 46, maybe you could justify it to 44, but I don't see a terrific setup there on the short side. Unless you're trading, again, a very, very short time frame. ACN changing from a uptrend to a downtrend, but look at that 21 on the daily. 21 on the daily is pretty flat, maybe pointing down just a little bit. I think you could find a better trade than that on the short side. Next we have Mosaic, MOS. Pretty good on the short side. We've been talking about these stocks have been weaker for well over a month now. I think if they start to break down, we had that support level in CF that we were watching. A couple of days ago, 138, and it's $8 through the support. So let's see if the rest of the sector starts to come in as the spiders start to come down again. Jesus. Baidu. Baidu has actually played itself out a little bit to the short side. If you look at it, we have one, two, three, four, five. We have about 90% of the last 10 days closed below the low. Excuse me, closed below the low. Closed below the open. So a little bit played out on the short side. I like the stock short the next bounce, but that doesn't mean I would get long here because it's not really a saturation play either unless it trades down a little bit lower and reverses. RIM, a couple people game planned for RIM this morning. Obviously, RIM had earnings yesterday afternoon, and everybody's saying could it possibly go lower? The answer is yes. So again, if you're trading RIM, recognize that you're trading a news play, not the charts. When news is out, the charts are broken. AXP, possibly changing from an uptrend to a downtrend, but if I personally am game planning AXP, I'm looking at AXP and saying we're forming a huge multi-month pennant or consolidation, whichever one you would prefer to call it, basically the same thing. Let AXP break out. And if I was game planning for this stock, I would write down AXP is in breakout mode. So I would be looking for AXP to be breaking out, and then I'd hop on the ride in either way, either direction. Okay, so we got a little news there, ACN, so it is gapping down there. All right, so everybody knows the homework, I hope, and we will talk about the homework on Monday, and I will see everybody on the open.